Volume is the deepest secret of the market. This indicator will teach you to see the market through the eyes of the market makers that hunts volume. This is not just an indicator, this is a machine for gaining an edge. Just watch.
5 days before the U.S. presidential election. The big players had already made their decision. They knew where the market was headed. And while the market was still bullish and climbing, they were selling euro to US dollar. Yes, you heard that right, they were selling while the market was rising. In massive volumes. 4-5 straight days. Meanwhile, retail traders were left wondering what would happen next. They analyzed, speculated, and feared the unknown. Just look at the chart. From October 22nd, the market had been on an upward trajectory. The moment the election results were announced, it crashed. Most traders waited, watching for the big players' reactions before making their move. But what were the big players doing? Looking at this chart alone, you can't tell, you can only guess. We have the utmost respect for traders who rely solely on clean charts, but some things are invisible to the naked eye. Let's arm our eyes with a powerful analytical tool and uncover the invisible. The market had been rising, but something changed. Something happened, a shift in the market's true interest. Between the two arrows, the real selling began. And it was exceptionally well disguised. Notice the bullish gap. This was 5 days before the election results. When the results were announced, the market peaked and then collapsed. What do you see on the chart? The upper line shows the level where bullish market volume exhausts itself, and interest in that direction disappears. The middle line is the trend line. It changes color. If it's green, the trend is bullish. If it's red, the trend is bearish. The lower red line shows the level where bearish market volume exhausts itself. Look at the bigger picture again. The market was deliberately pushed upward for 5 days, only to be crashed and profits realized. Why am I sharing this example? Imagine the market as a monster that feeds on volume. The monster moves toward where the volume is, and it won't stop until it devours it completely. Once it's done, it moves on to the next target. This is how the market shifts from bearish to bullish trend. And back again. With Meravith you can explore the market from any point. You no longer care whether you are in a trend or a range. That is now secondary. What's more interesting is where the market's volume will be exhausted and the market will reverse to seek new volume. If you analyze a period that's too long and the exhaustion line is surpassed, a new exhaustion line will automatically appear, so that, in addition to everything else, you will see the channel in which the market is moving. It doesn't matter where you start. Meravith will analyze the entire volume from the beginning and turn it into market levels. Notice how, when you move the indicator, the exhaustion levels change as well, because the volume changes. When new volume appears on the market, Meravith immediately reacts and recalculates the exhaustion levels for both bulls and bears. The market trend is a relative concept. From one perspective, it might seem bearish, and from another, bullish. But from any given point, if you examine the volume, it can only be one, and that determines the direction of movement.
Meravith is a fantastic trading weapon. Invest in it and take it while you can. Wishing you profits.